Hey everyone, and welcome back to the channel. Today we're diving into a topic many of you entrepreneurs out there wrestle with: funding. You've got this incredible vision for your store, ideas bursting at the seams, but that initial capital to make it pop can feel like a brick wall. Maybe you need to stock up on inventory for a killer holiday season push. Perhaps you're eyeing some new marketing campaigns to really drive traffic. Whatever the case, having the right resources at the right time can be the difference between stagnant and stratospheric growth. So, what are some options for Shopify store owners like yourselves? Banks? Sure, but the traditional loan route can be a long, complicated game, often with a hefty dose of waiting and hoping involved. That's where Shopify Capital enters the conversation. Now, before we jump into the nitty-gritty, let's be clear. This video isn't sponsored, and I'm here to give you the straight scoop. Shopify Capital is a financing program offered by, Shopify, specifically designed for Shopify businesses. Intrigued? Let's unpack exactly what a Shopify Capital loan is and how it might help you fuel your entrepreneurial fire. Cash in your pocket, built for your business. First things first, Shopify Capital offers two main funding options: merchant cash advances and loans. Now, these terms might sound fancy, but the basic idea is this: they're providing you with capital to invest in your store's growth. Here's the key difference. With a merchant cash advance, you receive a lump sum upfront. You then repay a fixed percentage of your daily sales until the advance, plus a set fee, is paid in full. Loans, on the other hand, work more like traditional loans. You get a specific amount of money upfront, but your repayments are typically fixed monthly installments with a set interest rate. Now, which option is right for you depends on your specific needs and financial situation. Let's explore the pros and cons of each. The MCA advantage: flexibility is king. Merchant cash advances are all about adaptability. Because repayments are tied to your sales, you pay more during peak seasons and less during slower periods. This can be a huge advantage for businesses with fluctuating sales cycles. Imagine you run a swimsuit store. Summer's a gold mine, but winter? Not so much. With an MCA, you can reinvest those summer profits to pay back the advance quickly, then coast through the slower months without the pressure of a fixed monthly payment. Another perk? Shopify Capital doesn't do traditional credit checks for MCAs. This can be a lifesaver for those of you who are still building your business credit or maybe took a hit in the past. The MCA drawback: knowing your costs. Alright, so MCAs sound pretty sweet, right? Well, there's always a catch. The biggest one: the fees associated with MCAs can be higher than traditional loans. It's important to carefully review the terms before applying to ensure you understand the total cost of repayment. Think of it like this: you're essentially borrowing against your future sales, so there's a premium attached. Loan down the line: stability and structure. Now let's talk loans. Loans offer a more predictable repayment structure with fixed monthly installments. This can be helpful for budgeting and financial planning, especially if your sales are more consistent. Plus, with loans, you typically get a clearer picture of the total interest you'll pay upfront. This allows for a more apples-to-apples comparison with other financing options. However, unlike MCAs, loan approval often involves a credit check. So, if your credit score isn't stellar, you might not qualify or may be offered a less favorable interest rate. So, Shopify Capital, friend or foe? Ultimately, whether Shopify Capital is the right choice for you depends on your specific circumstances. Here are some key questions to ask yourself. What is the funding for? Are you needing a quick boost for inventory or a more substantial investment for a marketing push? How do your sales fluctuate? If your income varies greatly month to month, the flexibility of an MCA might be appealing. What's your credit score looking like? If it's on the lower side, qualifying for a loan with a favorable interest rate might be challenging. Remember, there's no one-size-fits-all answer. Take some time to crunch the numbers, consider your business goals, and weigh the pros and cons of each option. Beyond Shopify Capital, explore your options. However, be sure to carefully consider the costs involved and ensure your business can handle the repayment terms. Do your research, weigh the pros and cons, and make an informed decision. With that said, thanks for watching, and until next time, happy selling.